Ladies and gentlemen, good day and welcome to the Q4 and FY22 conference call of Fermenta Biotech Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Aloni Jogani from Valorem Advisors. Thank you and over to you.
Thank you, Mike. Good evening, everyone, and a warm welcome to you all. My name is Aloni Jain, AVP of Valorem Advisors. We represent the investor relations of Fermenta Biotech Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter of the financial year 2022. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainty, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made and information currently available to the management. Audiences are cautioned not to place any undue reliance on this forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over them for opening remarks. We have with us Mr. Satish Verma ji, who is the Executive Director, and Mr. Sumesh Gandhi ji, who is the CFO. I now request Mr. Satish Verma ji to give his opening remarks. Over to you, sir.
Thank you, Aloni. Good evening, everybody. It's a pleasure to welcome you all to the earnings conference call for the fourth quarter and financial year ending 2021-22. I hope you're all keeping safe and well. I'm joined on this earnings conference call with our CFO, Mr. Sumesh Gandhi. Just to give you a brief key operational highlights for this quarter. Volumes of human vitamin D3 in Q4 FY22 grew by 15% over the previous quarter and grew by about 7% in FY22 over the previous financial year. The volumes of animal feed, on the other hand, in Q4 FY22 declined by 64% over the previous quarter and declined by 49% in FY22 over the previous financial year. The average prices of the feed grade was lower by 13% in FY22 over FY21. Now I request Mr. Sumesh Gandhi, our CFO, to give the financial highlights.
Thank you, Mr. Verma. Good evening, everyone, and thank you for joining this call today. Brief financial highlights for the quarter and the financial year ended 31st March 22 are as follows. On a consolidated basis, in Q4 FY22, the revenue from operations for the quarter was rupees 96 crores, which is a decrease of approximately 3.3% on a year-on-year basis and an increase of 3.6% on quarter-on-quarter basis. Operational EBITDA reported was rupees 18 crores, which was an increase of about 73.5% on a year-on-year basis. Operating EBITDA margin stood at 18.4%. The net profit after tax reported was about rupees 8 crores and the PAT margin stood at 8%. Now I will move on the consolidated financial results for the whole year ended 31st March 22. The revenue from operations was around rupees 399 crores, which grew by approximately 5.6% year-on-year basis. Operational EBITDA reported was around rupees 61 crore, which declined by 25% on a year-on-year basis. Operational EBITDA margin stood at 15.41%, while net profit after tax was reported at about 15 crores, which is a decline by 66% on a year-on-year basis. The PAT margin stood at 3.74. Having said that, let me just clarify that the benefit of Section 10AA under the Income Tax Act for the SEZ unit ceased to exist with effect from FY22. Hence, the PAT for the quarter, the PAT margins for the quarter and the year ended is not comparable against the previous year's same period. Lastly, I would like to mention that the Board of Directors have proposed a dividend of 25% on the face value of rupees 5 per share, which is rupees 1.25 rupees per share for the financial year ended 21-22, subject to the approval of shareholders in the ensuing AGM. With this, we can open the floor to the questions and answer section. Thank you.
Thank you. We will now begin the question and answer session. Anyone who asks a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Mirag Shah from Exemplar. Please go ahead.
Thanks for the opportunity. Can I have revenue figures of human and animal VD3 for Q4 as well as FY22?
Yeah, sure. So for Q4 FY22, the revenue for human nutrition is 49.3 crores and animal nutrition is 24 crores.
Okay, and for FY22?
For the whole year of FY22, human is 218.7 crores and animal nutrition is 76.8 crores.
Okay, and what is the update on Saika project? When is the project expected to go on stream?
Hi Virag, this is Satish here. I'll try to answer this question.
Yeah.
Virag, the plans are ready. However, we are holding back because as we have mentioned in the previous earnings calls as well, some portion of the Saika, like for example the premix plant, we have already initiated that in our existing Kullu as a brownfield project. So that has been taken care of in Kullu. So that most probably by this year end we should have the plant up and ready to be commercialized. We have taken the capacity expansion for our existing D3 within the Dahej plant itself. So we are delaying this by maybe about another quarter or two before we start implementing execution of the Saika plant. Mainly it is going to be for minerals and other capacity expansions, which we are already taking care of partly with what we have done in Dahej. And our new products, for example, K1 and vegan D3 also for the initial stages on vegan D3, we will be utilizing the Dahej plant itself. And once it picks up, then we will look at Saika, what we need to do for our entire capacities.
But this year, at least the construction work and all, you are expected to start or it's not?
I think our exact plans will be crystal clear maybe in the next 2 quarters. So we will inform everybody accordingly, Virag.
Okay.
I would not be able to say yes or no at this stage.
No, fair enough.
From all resources point of view, you understand that we are looking at monetizing the real estate assets and all that. We just want to make sure that we are not over leveraged also. So it will be based upon that. So maybe a quarter or two will give us much more clarity.
Okay. And regarding our that 25 hydroxy VD3 project?
This is a part of the vegan D3 process streams itself. And for the current to launch and commercialize things, we should be able to manage within our existing Dahej facility. So the action plans on new products is not going to change much because we are able to now, with all the expansions we have done in Dahej, we should be able to manage there, at least to launch the products. Then we will look at capacity expansions in Saika.
But this year we will be able to execute and commercialize the product?
25 hydroxy, I'm not sure, but vegan D3 is the first target.
Okay.
It's all in the same stream and everything. So vegan D3 is the first target. We are taking it one by one.
Okay, and my last query was more of a strategic one.
Yes.
We had previously guided for a steady-state EBITDA margin of 20% plus on a consolidated basis. But this fiscal, we have ended close to 15.5%, I believe, at a consolidated level. So are we confident of achieving 20% plus EBITDA in FY23 and going ahead, even if animal D3 prices remain at current level, or we feel a need to revisit our expectations for steady margin trajectory?
No, Virag, I think whenever we mentioned, because we are all aware of the fluctuations that happens with our margins because of feed grade. So whenever we mentioned the 20% was always an average over the next 4-5 years. If you look at our history also, it has always been mostly average. If you look at 5 years history or 10 years history, it will be more average kind of thing. So we are very confident that these averages will be maintained. You might see a significant up in 1 or 2 years in between, or you might see this kind of dip that we are seeing this year in between. But average, we don't want to change our guidance. We are quite confident that that average minimum should be maintained.
Thanks, and all the best.
Thank you, Viraj.
Thank you. We have the next question from the line of Milan Patel from Optium Edge. Please go ahead.
Yeah, thank you so much. First question is, our human segment has increased a lot compared to animals. So, any reason for that? And is the demand less for the animals?
Thank you, Mr. Patel. Our focus has always been on human. Human for various reasons, because of, to a significant extent, our efforts in growing our market share and acquiring new customers in the human market has helped us in achieving these numbers. Whereas as far as the animal side is concerned, yes, we have a new product now with our German subsidiary getting it manufactured in Germany. But in general, the animal volumes and prices have been quite suppressed, unfortunately, for quite some time now, maybe almost a year or so. Hopefully things will turn around. But our focus is mainly on human, while we have a decent presence in the animal segment.
Sure. And sir, another question is, how big is Worli and Pune land, and when will we be monetizing on that?
Pune land, we are in the market. As and when we see some visibility, we will definitely inform everybody. Worli, we are not as actively in the market as we are with our Thana and Pune, but the intention is to monetize.
Okay. And sir, can you give idea about when we are launching vegan vitamin D3 and vitamin K?
The target is over the next 2 quarters to have the product launched.
Okay. Just a last question. Our net profit margin has declined significantly. So how are we working on getting the numbers back to normal?
Sumesh?
Yeah, sure. Mr. Patel, so like I said, that net profit is something, it's not fair to see from a profit perspective because we did not have the benefit of Section 10AA in this year what we had in the previous year. So from an EBITDA margin is something we will be talking about it. So from an EBITDA margin, I think so like we said, we are confident that on average we should be able to maintain the guidance of 20% what we have said. So there is no change in our guidance with regards to the EBITDA margin.
Sure. Thank you so much, sir. That's it.
Thank you, Milan.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Suchitra Doshi from SR Investments. Please go ahead.
Hello. So my first question is that you had come up with molnupiravir, but the efficacy of it has reduced now. It's all over the news. So is it at all contributing to our top line, and are we still manufacturing it?
Madam, we don't manufacture molnupiravir, but we manufacture the enzyme that is used to manufacture molnupiravir. We have, I think so far, to the best of my knowledge, we are the only company which offered a technology to manufacture molnupiravir through enzymatic process. We had tied up with Dr. Reddy's for this molecule, who had a license from Merck. We did some supplies previous quarter, not maybe Q4 itself. We might have made some supplies to Dr. Reddy's, but as you are aware, the molecule itself is not picked up. but we do not manufacture the molecule. We manufacture the enzyme that is used in the molecule, which enzyme is used for various other purposes as well. So we continue to manufacture the enzyme. But unfortunately, until and unless something changes on the molecule from efficacy as well as a regulatory point of view, we don't expect anything significant coming from that portion of the business which this enzyme goes for.
Okay, got it, sir. How exactly do we make cholesterol from wool grease, and then how is vitamin D made? And also, how much wool grease do we import?
Madam, to give you an idea, we import more or less close to about 70 to 80% of our cholesterol requirement, which can come out of the wool grease. That much we import from wool grease. Wool grease to cholesterol is a complicated process where cholesterol is extracted. There are different technologies used at different stages. Cholesterol is extracted, then we have a byproduct that comes out of it, which are lanolin byproducts, which we are trying to valorize. So our overall benefits of manufacturing our own cholesterol will come once we are able to do that. We hope to finish that exercise also by the end of this year. As far as cholesterol to vitamin D3 are concerned, the process is concerned, it's a multi-stage process, but the most critical stage is where photochemistry happens. Like for example, sun is supposed to convert the cholesterol or whatever derivative of cholesterol is there in your body to vitamin D3. Similarly, we do it in plant. So we run the raw material through a process where specific UV rays, high intensity lights are focused on that particular raw material, which then is converted into vitamin D3.
Okay.
In short, the photochemistry is the most critical part.
Got it, sir. Got it. And then when are we going to start monetizing on lanolin?
Lanolin, hopefully we should be able to valorize the side streams by the end of this year. We should be able to start commercializing that. We are just working on various requirements as far as meeting customer specifications and all are concerned. So that exercise is on, madam. So hopefully by this year end we should be able to do it, if not before.
Okay, that's great. And what is the status on the Sayakha project, and which all products will we be launching there?
I just mentioned I'll just repeat what we are going to do with Sayakha. I think another couple of quarters before we have clarity and disclose exact timelines. But however, currently because premix is already being, a plant for premix is already being constructed in our Kullu facility. So Sayakha will have minerals. Sayakha will have additional capacities that are required for our regular vitamin D3 or the new products like vegan D3 or 25-hydroxy that we are looking at. And if our enzyme business picks up, then we will look at some fermentation capacities there.
Okay. And my last question is that are we still partly outsourcing cholesterol from Nippon and Dishman, or are we now totally self-sufficient?
We are still partly outsourcing, but from one company. We have stopped from Nippon. We are outsourcing some portion, about 20-25% of our requirement. We are still outsourcing.
Okay, great. Thank you so much, sir.
Thank you, ma'am.
Thank you. We have the next question from the line of Akshay Jain from Joindre. Please go ahead.
Hello.
Hi, Akshay.
Hi. Thank you, sir. My first question is, what is the status of the premixes plant? It was told that it will commission soon, but nothing out yet. Can you please tell about this?
We were indicating that we should be having this plant ready by Q3.
Okay.
At the most, it might go to Q4 of this year, but we should be commercializing our products by Q4.
Okay. Second is, recently you came up with some voting for real estate. Can you
Yes,
elaborate
sir.
about this?
Nothing. We went for a postal ballot for the joint development deal that we have announced.
Okay. Fine. Got it,
We
sir.
are not.
Thank you.
Yeah, we are not doing anything ourselves. If you are worried that we are getting into real estate, no, we are not. We are in the process of monetizing. So this is one of the steps that we have done in the overall picture.
Okay. Understood, sir. Yeah.
Thanks, Akshay.
Thank you, sir. Good luck for future.
Thanks.
Thank you. We have the next question from the line of Ankita Jain from AG Investment. Please go ahead.
Thanks for taking my question. My first question is, when are we going to list on NSE? It's been on the table for quite some time.
You have more questions, Ankita, or this was your question? Hello. Ankita, I think we have been trying to clarify over the last two calls that yes, in principle, there is an approval or there is a recommendation from the management and the board to go forward and list our stock in NSE as well. But as you are aware that there is a merger that has been announced, merger proposal that has been announced, and that is pending to be completed. We should be applying in NCLT sometime soon, very soon, hopefully. Post which is when it will be prudent to go to NSE because there is listing requirements, there are disclosure requirements, there are approval requirements. So we said we'll finish all this and then go for NSE.
Okay. My second question is, you have been guiding that the animal feed price will increase, but the trend now has reduced more. And if animal price don't rise, our margin too won't rise. So what is your guidance now?
Ma'am, it has been too long that the lower prices have stayed. You would notice that we have always been giving in our investor presentation, earnings presentations and investor presentations, you would see that we have always been giving over the last 10 years how the animal feed prices move. It is cyclical. You would notice from that. None of the years there is a stable price. There are very, maybe about 200-300% variation is there almost every year, except for the last 1.5 years. COVID was one of the reasons. Then just before COVID and during the initial periods of COVID, African swine flu was significantly prevalent. So the trend is continuing. Unfortunately, it is not in our hands how the market moves. This particular product is commoditized, and most of the volumes come mainly from China, and they determine the prices more than anything else. Our market share in animal feed is closer to 5%, 4 to 5% maybe. So it's wait and watch. We are hoping that it should move soon because at these prices, really, no one is making money. As far as Fermenta is concerned, our dependency on human side is much higher than the animal side, and the human side, as you are aware, is pretty stable.
Okay, thank you.
Thank you, Ankita.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Dheeraj Jain from HEM Securities. Please go ahead.
Hello, good afternoon. I hope you're all doing fine. My question is, the margins are fluctuating every quarter. Can we expect any stability on this end?
Hi, Dheeraj. I think if we take out the animal feed part of it, you have seen also what was the decline in animal feed in both in volumes and prices this year. So if you look at the organization minus the animal feed, you will see much more stability rather than these fluctuations that are happening. Animal feed, as I've just explained, unfortunately, if you look at even the last 10 years trend or even 50 years trend, it has been fluctuating. We are present in the market, but unfortunately, it is not in our control as far as the fluctuations are concerned on this particular product.
All right. I have one more question. Why was there such a drastic difference in the financials in this quarter as compared to the previous one?
Previous one, if you would have noticed, our subsidiary where there was a revaluation of stocks because of the animal feed prices being low, had given us a significant impact on the margins. If you look at standalone, I think we had better sales than last quarter, so you would see that difference coming in.
Sorry, one more question. Are we still present in rodents and environmental solutions? If yes, how?
Environment solutions, we are present, yes. We are present in offering solutions both from a biology point of view with our enzyme products and also technical solutions right from our engineering capabilities to everything. You might not still yet notice the numbers in this quarter, but by the end of this year, I'm sure that you will start seeing it as a separate contribution in the pie chart because we are making good inroads there.
And what is going on with our subsidiaries? Are they still performing bad? And how will that be managed in the future?
As far as Germany, our 100% subsidiary is concerned, it is completely animal feed related. As we have mentioned last quarter that we just got about 4 or 5 months back the approvals finally to be able to market this, manufacture and market this product out of Germany. Fresh approvals from customers, everything is in process. We have to meet our volumes. We have enough approvals and enough customers in hand and approved the product. So it should change. Now, whether the numbers will change or not, whether we will see a slight loss or we will see profits, will again loop back to the animal feed prices. You would notice that this quarter, because last quarter we had to do revaluation of stock, you would have seen a significant negative, but this quarter it is very minor negative. As far as US is concerned, similarly, what was last year, what is this year, you would see the difference. Things are improving, and going forward, they should start contributing positively to the company's overall numbers.
All right. And sir, how is AGD nutrition? We have reduced share to US, so how will we increase it?
See, again, two reasons. One was we stopped manufacturing a feed grade product in India and started in Germany, and the Germany approvals took time. So that was one of the reasons why the volumes in or the sales in AGD you would see down. Of course, the prices also will reflect on the numbers that you see as a turnover. So that is another reason, because the previous 2 years the feed prices were high, so you would have seen the higher numbers. So when the feed prices are low, the numbers should not, the numbers automatically you will see as low. It should not affect the profitability of the feed prices, should not really affect the profitability per se or going into negative or something like that, because it is more a trading for that particular product. It's more trading, so they get their commissions irrespective of whatever the prices are. Of course, it is a percentage of whether it is 100 rupees or 1000 rupees. It's a percentage of that. So animal prices will reflect on the commissions that they make, but there is no really any investment into the product itself. Apart from that, I would say that a significant portion of the numbers that we have lost on animal feed were covered by the new customers and sales we picked up on the human side in AGD. So that has actually come for the better. And as and when the feed prices change, you will start seeing that reflection in the AGD numbers also. AGD now is called as Fermenta USA, I believe.
All right. Okay. Thank you so much for answering all the questions, sir. Wish you all the best for future.
You too, Dheeraj. Thank you so much. Keep safe.
You too. Thank you.
Thank you. We have the next question from the line of Dhruv, who's an individual investor. Please go ahead.
Yeah, thank you. What explains the quarter-on-quarter revenue growth and margin expansion in both the standalone and consolidated numbers this quarter, given that the pricing and volumes in the animal vitamin D3 business continues to move lower?
Dhruv, thank you so much for the question. So basically, it was the volumes which we saw in the human side which were higher in this quarter, which had contributed on the higher revenue, and that would also automatically happen on the margins.
Okay, so the revenue share of the human segment was higher this quarter compared to last.
Yes, for this quarter, if I have to put across, it was approximately 52.2% of my total revenue. In this quarter, vis-a-vis the last quarter, it was 50%.
Okay. And also, can you tell us about how the prices are moving in the animal segment in April and May?
But the trend is similar, Dhruv. There is nothing significant to be spoken about.
Okay, and more of a general question actually. I think you mentioned that there are only three competitors or three companies worldwide in the vitamin D3 space, I think in the human category. So what exactly is the reason for this?
I would not say three companies are in the human space. I would say that there are multiple companies in China, but one of them holds a significant market share. There are two companies outside China. That is, one is Fermenta in India, and another one is DSM in Europe. China, there are more companies. As far as human is concerned, I think China, because of the volumes, 80% of the volumes go into animal feed. So China's focus is more on animal feed. We have more regulatory compliances to everything else. It's a long process for a pharma human side for approvals to everything. So one is their focus, and the other one is the regulatory aspect of it. So maybe we hold maybe close to 25% market share, global market share on the human side, while we have less than 5% on the animal side. Now, why there are only few players? It's a niche segment. It's a niche product. It is not like antibiotics or something like that. And already there are enough players in the market, including us both outside China and inside China. And more importantly, the technology is not simple. It's complicated. I would say that maybe Fermenta, to the best of our knowledge, Fermenta and one company in China are the ones who are completely backward integrated. So we are only two companies that are completely backward integrated, to the best of my knowledge.
Sure, sir. Thank you.
Thank you, Dhruv.
Thank you. We have the next question from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my question. I had one question regarding the various capacity expansion we are taking and the product introduction. What would be the revenue opportunity, incremental revenue opportunity from this initiative?
If the capacity expansion that we have taken is completely utilized for our vitamin D3 segment, because the capacity expansion we have also done in such a way that it can be a multi-purpose chemistry plant. If it's completely utilized for vitamin D3 alone, depending on the animal feed prices, from a capacity point of view, about 20 to 25% increment has happened. So that should add into the revenue depending on our market requirement, the market demand. Otherwise, that is the reason I was mentioning Saika. We are taking a little more time because of the multi-purpose nature of this plant that we have done in the capacity expansion. Our K1, vegan D3, etc. can happen within that itself. So if you need to utilize because of the market demand on D3, we should be able to utilize, and it should be at least 25% more in terms of volumes. And if we are utilizing that, that means the feed prices should be good. That will definitely add much more in terms of margins and revenues.
And sir, any volume guidance for FY23 in terms of animal and human feed?
Volumes we never give, Yogesh. There is, because of the nature of being only 3 companies in the world, we are a little cautious about giving our volumes in public.
Sure, sir. And lastly, on the margins. So, margins have been volatile. So, do you think we are at the margins we currently had? This was at the bottom. This was at the bottom level, and margins will expand from year on.
The margins are lower mainly because of animal feed. We are in the lower end, but that is where we have been over the last 1 year. So, as soon as it changes, we don't think so it should go further down. If it goes further down, people will start losing money as well, not just Fermenta. It should not, even if it goes down, it has to be a blip. It can't be, we don't expect it to go down, but if it goes down, it has to be a blip. It can't sustain lower than this. Even this itself is tough, especially for companies which don't have
margin guidance, that would be possible in about 2-3 years.
Pardon me?
The 20% margin which we are targeting, that would be possible in about 2-3 years because of the volatility?
Over the next 4-5 years, you will see that including this year also, your average should be 20%. If you take over a horizon of 4-5 years and look at averaging it out, we should be doing that 20%. If the feed prices pick up, your margin should go about 23, 24, maybe even 25 and above. We have seen margins of even 37%, if you recollect, few years back. So we will average out. We are confident of that. Just look at the feed prices chart and it will give you an indication of how the movements happen and how the margins can change.
Sure. Thank you. That's all from my side. Thank you.
Thank you so much, Yogesh.
Thank you. We have the next question from the line of Milan Patel from Optium Edge. Please go ahead.
Yeah, thanks again. Sir, can you tell us more about Thane land? What are you doing with it?
Milan, as we mentioned and put it in our presentations as well, Thane land, we are going for a joint development. Maybe the key highlights, Sumesh, can you just repeat the key highlights?
Yeah, sure. So, Milan, the key highlights of it is that it's a development right which we have given to Maxtech Properties, which is basically a joint venture from the promoters of Nandivardhan Group and RRC Ventures, who are pretty well known on this part of the town. And RRC Ventures has done a lot of development for big. The whole idea is we would receive 1,000 square feet of RERA carpet against the development right on the land which we will be giving it to them. We would not be spending any money by way of any construction costs, nor any premiums or any approvals or anything. Yeah. So, and plus what's going to also happen is that we would not be, the land would not be mortgaged by them for the purpose of taking any debt or any loan.
Okay. And another question is, if you can give idea on whether our peers like DSM seeing the same margin for vitamin D3?
I would not be able to mention. Their financials are public knowledge, but they have a basket, so they don't give individual margins out.
Okay, fair enough, fair enough. So last question is, why have we delayed all our new products, and are we going to take more debt for that?
Yogesh, there has been a delay in our new product pipeline because of 2 years of COVID. The demand on vitamin D3 human because of immunity requirement, the way the demand went up, our complete bandwidth went into that. It was not that our company, no one got infected or anything like that. Through that entire struggle, we made sure that we catered to every single gram of demand that we had on our regular product. And that was reflected in the numbers during the tough periods as well. We just didn't have the bandwidth, to be very honest, Yogesh. Although we wanted to launch and commercialize a couple of important projects, like for example, K1 and D3, we just lost out the time in COVID. We didn't have the bandwidth and resources. As regards the investments required for our SICA, we are being cautious in terms of over-leveraging ourselves. You are aware that we are monetizing our land assets. So hopefully we won't increase our debt levels when we are looking at the new capex requirements. As far as this couple of new products, like for example, premixes are concerned, we are already taken that debt. We have increased our debt by about 25-30 crores to implement that project in Kullu, because it becomes a brownfield rather than a greenfield. And number two, as far as K1 and Vegan D3 are concerned, currently we do not anticipate any capex requirements for that, because we are going to utilize it in the multi-purpose plant which we have created in Dahej.
Okay, sir. Thank you so much for the clarification.
Thanks, Milan.
Thank you. We have the next question from the line of Suchitra Doshi from SR Investments. Please go ahead. Ms. Suchitra Doshi, can you hear us?
Hello?
Yes, we can hear you now. Please go ahead with your question.
Yes. So my question is that do we still have relations with Turkey company for 2 of our products? And can you tell more about the uses of these products as well?
Yeah. Turkey, yes, we have the relationship. The company's name is Recordati in Turkey. That is where the relationship is. One product is called phenyramidol hydrochloride, which is a muscle relaxant. Turkey is the only product market for that particular molecule, and we are the only company which is supplying to Recordati. That is one product. The other product is silicon dioxide powder. This is a specific requirement that has come from Recordati, or earlier avatar of Recordati, which was a Turkish company called Dr. Frick, for us to be manufacturing that and supplying to them. So that plant has been set up about 15 odd years back. So both these products are this product is used as a flatulent, so it is more like a filler in the one of the products that they sell. I think pancreatin or something like that is the name of the molecule that they use this flatulent in. So these two products I would like to look at it as more of an annuity business with long-term contracts with specific margins, which we have been doing over the last 22 years. Just it's a principal to principal business.
Okay. And how is the fish oil cholesterol segment doing? Are we increasing our stake in that? And are we also making the byproduct, which is omega-3 fatty acids from it?
No. We get this fish oil crude after omega fatty acids have been taken out. We make cholesterol from that. Currently, we are utilizing it for the aquaculture market as shrimp feed. The company's strategic goals is not to be in the shrimp market. The company's strategic goal was to be present in wherever there is cholesterol that can be extracted, which is possible. So we will see if we can use this fish oil maybe for the animal feed or something like that. But until then, we will restrict our presence to the volumes that we have.
Okay. And what will be the split in vitamin D3 and nutraceuticals in the coming future, and how will it be achieved?
We hope that currently vitamin D3 is more than 70% of our overall revenue, maybe even up to 80% of our overall revenue. We want to see if while the vitamin D3 business grows as well, the nutrition should contribute another at least 25 to 30% of overall business over the next 4 years.
Okay, understood. And one last question. Will the 200 crore for Saika be for the first phase, or will it be for the entire CapEx? And we have already taken the 40,000 square meter land, so what are we doing with that?
Yeah. See, we just got the approvals during the COVID period. And then because of availability of resources, not just in terms of monetary, but also human resources, we decided one of the projects that we wanted to do in Saika, we are doing it in Kulu, that is a premix plant. That is one of the reasons why we are delaying more and more in implementing something at Saika. As far as total investments to be done, it will be more to the tune of 150 to 200 crores overall, not in phase one. And this 150 to 200 crores also, we expect to do it in phases.
Okay, got it, sir. Thank you so much.
Thank you, ma'am.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. We have no further questions, sir. I would like to hand it over to Mr. Satish Verma for the closing comments.
I'm Sumesh Gandhi over here, and I will give the closing statement. Thank you all for participating in this earnings con call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our investor relation managers at Velorum Advisors. Thank you, everybody. Stay safe and see you soon.
Thank you. On behalf of Fermenta Biotech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.